tax questions you want. I mean, I come to these things and people ask me all kinds of stuff, but I'm gonna go through this one piece first because for realtors, I've done real estate for literally 24 years of my career. When I was with one big firm, before I went out on my own, I did real estate probably 90% of my time for 8 years. So I know your business, I know how you guys
What
operate.
company?
With Johnson, Jacobson, Wilcox, which is now called I. Bailey.
Here in Nevada?
Yeah, over off Russell and 215. So, but this is the most important thing. If you're gonna get anything out of today, get this, because this will save you a lot of money. So, if you're if you're a sole proprietor without an LLC, you're over here on the left, Schedule C. And this is an example of if you made 100 grand on a Schedule C, sole proprietor, no LLC, no S Corp, no nothing, and you're in a 15% tax bracket, you're gonna pay $15,000 of income tax, and then I'm sure you're all well aware that you also pay self-employment taxes on all of your income, your net income. That's 15.3%. If you're doing it right, you should probably be paying the state a little bit too. I left that part out just for simplicity's sake. But you would pay $30,300 in taxes on $100,000 of income. Okay? That's a pretty big nut, really, 30% of 100 grand. But if you're an LLC, which is just LLC is just, you could be an Inc. too, but the LLC is the most popular entity to be in Nevada. It's got the most liability protection and other things. If you're an LLC, and then we make an election to tax you as an S corporation. An S corporation does not pay income taxes. The income or loss, whatever's in the S corporation, flows through to the owner, and the owner pays the taxes at a personal level. Okay? If you're an LLC, taxes an S corporation, we can split that same 100 grand into two pieces. The left side being a wage, because if you're an owner of an S corporation, the IRS requires that you would get reasonable compensation from the corporation, okay? So we take 50 grand and we put it over there in the wage category. The other 50 grand, you just take it out as a profit distribution. Just write yourself a check for that, okay? On the wage, you're still gonna pay the payroll taxes and you're still gonna have income tax because frankly, you're gonna get a W-2 from your own S corporation. So you still pay both those taxes, it ends up being $15,150. On the profit distribution, you still pay taxes on that because that's money you still made because you made 100 grand overall. You're gonna pay taxes on income tax on that, which is $7,500, but you're no longer gonna pay the self-employment tax. So that same $100,000, now you end up paying $22,650 versus $30,300. Anybody here doesn't want to save 7 grand? Everybody wants to save 7 grand. Like this last couple of years, I mean, realtors have done well, right? This is real money right here that you're missing out on by not being an S corp or taxed as an S corp. We do this for everybody that comes in the office that's really even just a sole proprietor. That makes at least 50 grand a year. If you make under 50, it's not worth it because there's a cost to this. I put that on here, estimated S corp cost, $1,200 to $1,500 a year because you have to do a tax return for the S corp and you've got to do a payroll, and so there's a few hoops you got to jump through to make this thing happen. But you still end up saving on 100 grand. You still end up saving even with that. Call it 1,200 bucks. You still save about $6,400 on this setup. So like every realtor or sole proprietor that comes in my office, we typically go through this scenario. I don't do this neatly because I draw it, but it's just a huge tax savings for everybody. The other benefits to this is when you're an S corp, you are so much less likely to be audited by the IRS. They literally don't audit S corps. I haven't had an S corp audit in 15 years. I mean, you just don't see them. They don't do it. That went away about 2018. So entertainment, there's no entertainment at all. I've got a ton of clients that are buying, Golden Knights tickets and Raiders tickets, and they're like, why don't I get a deduction? Sorry, it's gone. Sometimes we throw a little something in marketing or advertising, but we gotta kind of rationalize that. For meals, right now, business meals are 100% deductible. They have traditionally been 50% for as long as I've been doing this. They changed that when they got rid of entertainment. They changed the meals and allowed that. But right now, it's 100% deductible if it's a business meal. I always recommend that you put a business meal on your calendar and you put who you're having that meal with in the calendar, because they will ask at some point if you get audited. They'll basically make you have the receipt for the meal, and they want to know why it was a business meal. Who did you have the meal with?
Is it okay to write down like the person's name and stuff on the
usually on the
receipt itself?
receipt. Like what I tell clients all the time is there's apps on your phone, like TurboScan is one that's real popular, that when you're at the meal, you pay the bill, write down the name of who you're with, and scan it right then. Because honestly, then you can throw it in the trash, because then you have it. And receipts fade over time anyway, so you're better off scanning them right then, just get them in there. And like TurboScan's a great app for that. And then you can sort them by year or whatever it is. But just write it on there and take a picture right then. So you got it.
It's also helpful to put down what you talked about.
It helps. If you don't think you can remember later, for sure, because you'll get audited 2 years after the fact. Right. And you're going, man, what were you doing there? Or even sometimes you're like, who was that person? You might have their name, but you might not remember.
Does liquor count for meals when you're having, like, if you have a beer, wine, or a bottle?
Yeah, if it's part of your meal, sure, absolutely, you can have alcohol.
Is it has a time during the day? Is it night or?
It doesn't really matter. They don't know what time of day the meal was. They just know where you went, So, if they would look for stuff like, all of a sudden you had a meal at Chuck E. Cheese. Well, why were you at Chuck E. Cheese, Probably took the kids for birthday party. That kind of stuff. That's what they're going to look for is meals that you say are business, but they're not really, or out of state. That's a big one. If you're somebody who likes to go to Newport a lot, and you're having a lot of meals at Newport, why would you count that as a business meal? You better have a reason for it. That's the kind of stuff that's scrutinized.
Are you looking to close more business this upcoming year? Well, let us help you. Number one, we have a great support system. Not only would you have me as the broker owner for over 21 years of experience and knowledge, I have some high-level producers, AKA closers, that are willing to collaborate with us, and those of you that maybe have a hard time getting your deals closed, well, I'm going to tell you, we're going to help you. We're going to have what's called Collaborate to Close. That's the way and the time that you can come and bring your problems, your issues, things that maybe went wrong, maybe a deal you're in the middle of, what you could do different to get to that closing table. Let us help you. Again, we're collaborating with agents across the city here to help you build your business and get to the closing table.